policymakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Chinese President Xi Jinping has met with Russian President Vladimir Putin in Beijing ahead of a major parade to mark 80 years since the end of World War II. Now, Xi is expected to speak at the event that will also see the North Korean leader, Kim Jong-Un, in attendance. Well, joining us now is Min Lo, our China correspondent in Beijing. Min, thank you for joining us. So let's start with that meeting between Xi and Putin. What exactly was discussed?
Yeah, it's a very important meeting because first of all, President Xi, again, addressing Putin as his good friend. President Putin saying that the relations between the two sides are now at an unprecedentedly high level. But what's important is the number of deals they have signed. Xinhua, the Chinese state news agency, saying that about 20 bilateral agreement documents have been signed, covering areas like artificial intelligence, education, health, many different sectors, scientific research as well. But the most important one is the energy deal between the two sides. Gazprom, which is Russia's state-owned oil and gas company, agreeing to build this Power of Siberia 2 pipeline to China. This is something that's been in talks for many years, but China has for a long time been reluctant to sign on to this deal because they didn't see it as, an urgent need to step up their gas purchases from Russia. They didn't want to over-rely on a single country, but this is in some ways a lifeline to Gazprom, which has seen its profit really been hit after the Ukraine war. This gas pipeline will help it recoup at least a third of the gas pipeline sales to Europe and redivert it to China. So certainly a very big deal. Both sides also agreeing to step up the flow of natural gas through the existing pipeline as well. Interesting to see what this means then for any potential talk between Trump and Xi of a trade deal between the two sides, because Trump has been threatening China of more tariffs if it continues to buy or increase purchases of Russian oil.
So, Min, North Korea's Kim Jong-un will also be at the military parade, but India's Modi won't. Do we read anything into that?
Yeah, I mean, for Kim Jong-un, it is a very important meeting for him. One of the rare opportunities for him to share the same stage as the big brothers, President Putin, President Xi. Look at that image, something that would be very iconic that I imagine will live on the internet forever. The three of them standing above that dais of the portrait of Mao Zedong below them on Tiananmen Square. And it's an important meeting for for Kim Jong-un. Just ahead of this, he visited a new missile factory in North Korea and unveiled a new development program for its intercontinental ballistic missile. And really that is in defiance of the pressure from US and South Korea to end its nuclear program. And here he is going to stand on the same stage as Xi and Putin, showing that he has friends in important places, even despite some of these pressures from other Western-led nations like the US. But for Modi, it's an interesting balancing act that he has here, right? Yesterday he met with Putin and it was a very good meeting. He said it was an excellent one. They had discussed a lot of issues from improvement, increase in trade, to security, cultural issues and all that. But at the same time, he's not going to appear tomorrow to be standing alongside these autocratic leaders. Not a good look for India, which is one of the world's largest democracy, or at least it prides itself on that. So Modi perhaps hedging his bets a little bit, wanting to put a bit of distance, even as he tries to cozy himself up to some of these other countries in the region, as he tries to counter the impact of tariffs from Trump.
Min, thanks so much. Min Lo there, our China correspondent. Now, U.S. payroll data on Friday poses a near-term risk for markets as traders wait to confirm bets on a Fed rate cut this month. At the same time, your area inflation data also on traders' radar as they watch for any potential surprise, with policymakers widely seen keeping rates steady next week. It comes, of course, as global long-dated bonds come under pressure, 30-year gilts rising to the highest level since 1998. Well, joining us now is David Zahn, head of European fixed income at Franklin Templeton. Thank you for joining us, David. I mean, there's a lot going on. I'm looking at the UK, actually the 30-year, and it's out of control, putting extra pressure on the PM, Keir Starmer, to get his act together.
Well, I think it's not out of control. I mean, we're seeing yields rise, and that's kind of a bit exciting for the market. I just think that we're seeing that, yields are becoming, just gradually going higher in the UK. They need to do something on the fiscal side to either raise taxes, cut spending, or both. And we're not really seeing anything about that. We have to wait till the autumn statement. And so I think the moves that Starmer made yesterday by bringing some different people into number 10 is kind of making people question who's actually in charge of the fiscal side.
So, David, first of all, what do you expect from the autumn statement? Because, the Chancellor has a very narrow path to land the plane, and last time it didn't quite land where it should have.
Well, I think there will probably be more of the same. I think they're going to try to, live up to their manifesto that they don't want to raise the 3 key taxes, even though realistically that's probably what they need to do. They need to cut spending, but they probably won't do that because they don't want to do that. So I think they'll be looking for little things to try to, move taxes higher, but without breaking out of their promises.
So between finding savings and raising taxes, is there a danger? Like, what do bond speculators or
I think bonds
investors
continue to go up in yield. I don't think they'll believe that this is actually going to fix it by trying to put these Band-Aids on it. I think it's going to be more, we need to see a more radical cut in spending and a broader tax increase in order to bring the budget into balance. And if that doesn't happen, bond market will just continue to see yields move higher. At
what point does it become very uncomfortable for the government?
Well, I think it's already starting to become uncomfortable, but I think that, we've always talked about 6% on the 30-year, which, a while ago didn't seem that far. It seemed a long way away, but we're getting quite close now. So I think above 6 is when people start to question, is this actually a viable?
So what do you think? Do you think we'll touch 6 in the short term?
I think with that, by the end of the year, we'll be above 6, yeah.
And what happens again, because it's also psychological level?
Yeah.
Are we going to see radical reform for the government, or do people just get, come out of the UK?
Well, I think it's up to the government what they decide to do. And I think they're going to continue to try to just plug along and not really address the problems. But if the yields get too high, eventually they will have to do something much more substantial, which will include spending cuts. Yeah,
and I know it's not radical, but still, when you look at these moves, the yield climbed to the highest level since 1998. It's not nothing.
No, absolutely not. I guess what I'm saying is it's quite orderly. Like we're moving, 5-10 basis points a day. It's not like we're seeing big gaps. It's orderly. And I think that's what, like the Bank of England will be saying, well, it's being very orderly, so we don't need to do anything.
How do you see France?
Well, France is another country that's having its own issues. We see that the government is going to fall probably next Monday when they have the no confidence vote. It seems pretty certain that won't stick. And then really becomes what happens next. Are they going to just appoint another PM? That's possible. Do they go to elections? That's possible, but I think we'll get back a very similar parliament to what we have now, so that doesn't really fix anything. What we really need to have is to have new parliamentary elections and presidential elections. But again, Macron isn't going to step down. His term ends in 27. I see no reason why he should step down 18 months early. So I think that they will just continue in this kind of stumbling down the road. But, the credit of France is still a good credit. It's going to be, it's AA minus. It's probably going to be a single A after the credit rating agencies go through their moves. But I think from that perspective, it's still a very solid country within the EU. So it has the backing of the EU, which I think is also quite important.
David, overall, it does feel like the bond market is playing a bigger role. Like, as far as I can remember, it's always the bond market that, got rid of governments that weren't doing the right things in their eyes. Have they become more powerful now?
Well, I think the bond markets have always been something that people have looked to for information. I think that given that we're no longer in a QE era where all yields are suppressed, I do think you can have much more push from the bond market of we want radical change.
Is there anything that you buy right now in Europe?
We actually like the kind of 5-year part of the curve. And most countries like Spain or Germany, we think those offer good value. But overall, we're short duration. We believe yields in Europe are going to continue to rise.
Treasuries. What do you do with treasuries?
Well, treasuries are a tricky one because I think that you have a central bank that they've kind of said they're going to cut that later this month, but that's all down to the data, so we'll see what happens there. But I don't think they're going to go through a lot of cuts. They may cut 50, 75, but we're not seeing the market's pricing, I think, 150. We don't see that degree of cuts coming because inflation is still very much being sticky in the U.S.
David, there was a lot of talk about an auction in the U.S. going badly at some point and it being the day of reckoning, and that would definitely be disorderly. At the same time, the president is using a lot of these tariffs as a way to pay for what he's trying to do, for example, with the big beautiful bill. So does it even out?
Well, I think that's one of the things that we have to see how much money actually comes in from the tariffs, because so far we've seen tariff receipts go up massively, compared to anything we've seen in the past. And that does actually help the fiscal balance of the U.S. Not enough, probably, but I think that could actually make your budget deficit not look quite as bad, and so maybe people will be more relaxed about it.
Japan?
Japan, I think we see yields continue to rise there. We've seen the long end move up massively. I think the one area that people aren't as focused on Japan is that Japan is actually one of the big investors in global bond markets by investing outside of Japan. And now that their 30-year is 3+, and the curve is so steep, it actually doesn't make as much sense for them to move marginal new money out into the U.S. or into Europe. They may stay more at home, which also will have an impact, I think, on other bond markets.
So given all of these complexities, is there one thing that you're selling right now?
The long end of the curve. We still think
across
that long
the
end.
board?
Yeah. And Europe, we're short, and gilts, we're short. We think the long end of the curve should continue to rise because we have big fiscal deficits that need to be funded. And how is that going to be done? It's going to have to be termed out because still, overall, yields are relatively okay for all these countries.
So interesting. David, thank you so much for coming on. David Zahn, there, head of European fixed income at Franklin Templeton. Now, Nestlé has sacked its chief executive, Laurent Freixe, after only 1 year in the job due to an undisclosed workplace affair. The Swiss food giant named Philippe Navratil, who heads the Nespresso coffee brand, as his replacement. Well, we reached out for Freixe for a comment, but now let's bring in Jennifer Creary, our global business reporter. Jennifer, thank you for joining us. This took many, many people by surprise. What more do we know about the decision to fire Freixe?
So we know a few things. So we know that there was an internal investigation from the company, and this was after the matter was raised to the company via an internal platform called Speak Up. The company couldn't substantiate the allegations after that, and so they brought in an external counsel to conduct another investigation, and that is the result that we see today. So Laurent Freixe had an undisclosed relationship with a colleague, and this is a company that's known for its conservative culture, and the chair has said that this is against Nestlé's values, and to really drive that point home, he won't receive an exit package. I think reality is here, this is not an uncommon situation for companies. We see CEOs being ousted because of these undisclosed relationships before. The most prominent example, I think, is in 2019 when McDonald's CEO Steve Easterbrook left the company after an undisclosed relationship with a colleague. And most recently, earlier this year, Kohl's CEO was also ousted after directing millions of dollars of business to a romantic partner. So not an uncommon scenario, and this is the outcome that we see today.
So what are the challenges for his replacement?
Yeah, it's the same challenges, to be honest. So it's really trying to boost that share price that we know has been sluggish for many years now. It's down almost 20% over the past 12 months. And one of the big challenges will be tariffs, of course. We know that, particularly with their US products, Nestlé said that the majority of them products are made domestically, with the exception of Nespresso capsules that are made in Switzerland and now subject to those 39% tariffs. Interestingly now, the new CEO, Philippe Navratil, he headed the Nespresso division, so hopefully he can bring expertise now to that. Something that's very interesting as well, I think is important to highlight, is that Navratil is a very young CEO, so he's under the age of 50, and so investors can be looking to see whether or not he has a particularly long tenure going forward.
Very young, under 50. You've cheered everyone up who's watching. Jennifer, thank you so much. Jennifer Creary, our global business reporter on this pretty extraordinary story from Nestlé. Now, coming up, we're live at the Goldman Sachs EMEA Credit and Leveraged Finance Conference. We'll discuss credit risks, M&A, and much more with Christina Minnis, Goldman's global head of credit and asset finance. That's next, and this is Bloomberg.
I do think France remains an attractive investment area for a variety of reasons. Despite the political turmoil and the vote of no confidence on the 8th of September, domestic stocks have reacted well to the current uncertainty. And I think the country has a lot of positives.
Well, that was Céline Michelin, head of investment banking for France at Goldman Sachs, speaking to us at the Goldman Sachs EMEA Credit and Leverage Finance Conference. Now let's return to the conference, and U.S. companies are poised to boost their debt levels to help fund a $1 trillion wave of acquisitions, a reversal after years of scaling back their borrowings. Now the Fed moving closer to a renewed round of rate cutting, with executives gaining more confidence that stock market volatility has eased. Now that's improving conditions to make acquisitions. Well, I'm delighted to be joined by Christina Minnis, a global head of credit and asset finance and head of global acquisition finance at Goldman Sachs. Christina, as always, thank you so much for joining us. So what are the most important and appealing opportunities in credit right now?
Well, first of all, Francine, thank you for having us. This is a very exciting time for us, our 15th year doing this conference, our most successful conference with over 1,600 people registered. So thank you for being here. In terms of credit, some of the main themes that we continue to see we're excited about remain investing in technology and what's going on broadly in digital infrastructure and infrastructure writ large. There's a significant need for capital deployment over the next decade, and we believe the private credit markets are very well set up to support that as long as private credit continues to grow.
So when do you see a meaningful return in M&A?
So Céline, I think my partner was on earlier, a couple of statistics. The first half, global M&A was actually up 40%. Now, it was slightly softer in Europe. But what's interesting about M&A, today we've seen about 34% of that volume driven by our sponsor community. That's off of a 40% kind of historical number. So I do believe the return of sponsors into the market in a meaningful way is going to be super important. And we've started to see signs of that. In the U.S., just last week, there was a very large take private announced. And so we're quite optimistic that sponsors are going to be very active coming into the end of the year and into 26.
Christina, I mean, GS has been involved in private credit, for quite some time. The broadly syndicated market is coming in at pretty tight spreads. What role do you see for private credit? Can it actually remain competitive?
Yeah, I continue to believe very strongly that both markets are going to coexist and are very important to each market. So there'll be many use cases where private credit steps forward and really can help clients access capital. And then to your point, in strong markets with very strong credits, the broadly syndicated markets are far more competitive in terms of pricing. So both markets will grow, and I think there's a very strong indication that that's going to support our client franchise. And again, at Goldman Sachs, because we have one of the largest asset managers, and as you mentioned, we've been in private credit for over 30 years, we're quite supportive of both markets. And we think there's a lot of opportunity for investors in both.
I mean, there's when you look at the financing in the leveraged credit, space, there has been some quirky moves, certainly when it comes to the junior portions of it. Do you see that as a quirk?
Yep.
Can we see more of those moves?
I think there's still credit dispersion, and I think you still see some interesting opportunities in the triple C part of the market, whereas the single B and double B market has really rallied to all-time tights. And so I wouldn't call it quirkiness; it's just an opportunity for investment for those that really want to go down the risk profile.
Where do you see secondary trading in the private credit space heading?
I think it's going to continue to be a topic for conversation. There are many people that believe it's going to be very, very, very publicly traded. There are those that believe it will not be publicly traded. It probably lands somewhere in between. It's a significant market, and over time, I think players will want to look for some secondary liquidity. So I'm kind of in the middle, and I think it's actually a constructive development if we see some liquidity in that market.
Christina, overall, how do you see these markets actually changing in the next 12 to 24 months, given everything that we're seeing, but also reshaping of the global economy?
So I think we are all pretty much set that we're going to have Fed easing, and so that's going to have an impact on spreads. But all-in yields, I think, are going to be very attractive. I think the macro setup is actually relatively constructive. I think there's some concerns about the consumer and potentially the impact of tariffs and what that might do to earnings, but that certainly hasn't cropped up yet in any results. And so overall, I think credit is going to continue to be a very important, attractive asset class, and I think the deal industry is going to continue to pick up. Now, we've been talking about that for a number of years now, Francine, the return of M&A. But I think what we see in terms of corporate boardrooms and sponsor willingness to transact is really picking up. So we're quite optimistic about the end of 25 going into and into 26.
And Christina, is this opportunistic M&A because valuations are good or because there's a genuine appetite for some of these companies to become bigger?
I think it's a combination, Francine. I think you see certain companies that are taking advantage of great credit markets and going after acquisitions that have been potentially off the table in the past. And so we've seen some very interesting strategic M&A pickup. I think we've seen sponsor portfolio companies probably spend a little bit more time around dividend recaps, and now maybe it's time to think about actually monetization of the entire asset. And then I also think, what's going on in infrastructure is really incredible, which is going to drive significant financing driven by what's going on in AI, computing, data centers, et cetera. And so I think the Goldman Sachs research that just came out for 2027 has a $300 billion number. In data centers, we're pretty excited that we've got a very strong market share in that financing. We've got number one CMBS market share, and we've also got involvement in almost 40% of the transactions that have been done around data centers. And so while that's not necessarily M&A driven per se, there's a significant amount of capital raising that's going to be required over the next decade.
And Christina, maybe final question on Europe. Are you optimistic about what Europe can offer both in the M&A but in the credit space in the next few years?
Quite optimistic, and I think one dynamic, back to infra for a second, that is unique in Europe, or more unique in Europe, is that with the Basel rules just coming out, a lot of the infrastructure financing historically has been handled by banks, and I think with the stricter capital regulations, it's going to push more of that financing need into the capital markets, which again, I think is going to be a very attractive opportunity both for our issuing clients and our investing clients.
Mm-hmm. Christina, as always, thank you so much for joining us. That was Christina Minnis, a global head of credit and asset finance, head of global acquisition finance at Goldman Sachs. Now, coming up, President Trump claims India is offering to lower its tariffs to nothing. We'll get the details next. Also, a quick check on the markets because there's a lot moving, not only in futures in the U.S., but that UK 30-year bond yield climbed to the highest since 1998. I mean, the other thing we're talking about is, of course, when you look at pound, that's also moving. Economists predicting the UK will soon need to raise taxes to keep on the right side of the government's self-imposed fiscal rules due to concerns over basically the fiscal outlook and the structurally higher inflation. You can see sterling 134.04. You can see the dollar index 1,207. And then, look, the big one, we always look at the U.S. 10-year yield at 4.2731. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. China's Xi Jinping welcomes old friend Vladimir Putin to Beijing as North Korean leader Kim Jong-Un arrives to join his two allies at a military parade. The UK 30-year gilt yields rise to the highest level this century, while the pound extends its decline against the dollar, piling more pressure on the Chancellor Rachel Reeves as she prepares her autumn budget. Plus, major shakeup at Nestlé, the world's largest food company, ousts its chief executive over a workplace affair just 1 year into the job. Now, President Trump says India is offering to lower its tariffs after the U.S. slapped a 50% levy on a wide range of imports, punishing India for its continued purchases of Russian oil. Well, we're now joined by Rosalind Matheson, our chief Asia correspondent. Ros, thank you for joining us. So, has India actually corroborated this?
Well, no, India has not corroborated. So it's interesting to see that India has not said very much about this at all. So is this Donald Trump front-running an announcement again? He's done that before with India. We've seen he announced a ceasefire between India and Pakistan instead of India announcing it. So India is very quiet on this. Or is this Trump trying to open the door somehow to India? Is this a gesture in a way, him saying that India's claiming this on trade? Is this him trying to get a conversation going again about trade? Because, of course, tensions have been high between the countries over trade, over India's purchases of Russian energy. Is this maybe the first sign that Trump is willing to also renegotiate these 50% tariffs that he's put on Indian goods? I mean, obviously there's an incentive here to find a solution. It's a significant impact on the Indian economy, but also, Narendra Modi, the Prime Minister, has to come off strong to his people. So can the first gesture in this case come from Donald Trump? Interesting to see what happens next, but for now, no particular word from India on it.
And Ross, at the same time, the Brazilian president, convening a virtual meeting of BRICS countries next Monday to discuss trade policies from Donald Trump. Is this, a countermeasure to what Trump is doing?
Well, it's interesting to see that they're having this BRICS virtual meeting right after, of course, the Shanghai Cooperation Organization meeting in China, another grouping really of the global south, and perhaps it's to get a bit of a readout from that meeting. It's also to show again that these groupings from the global south are rising in influence and wanting to have a seat at the table, and the BRICS is certainly very much a part of that because it's also a grouping that's caught Donald Trump's ire. Of course, the Brazilian leader says it's not about trying to take an anti-US stance, but Brazil and the US have been particularly tense when it comes to trade. But it's probably about just showing again these countries are grouping together increasingly without the US, and they're wanting to show that clout in all kinds of different ways. So it's probably more a telegraphing exercise than anything else.
Ross, thanks so much, as always. Ross Matheson there with the very latest on India and the very latest on Brazil, our chief Asia correspondent. Now, European Union countries are also looking to plug any remaining loopholes to ensure that Russian gas will not be mixed into the bloc supplies once a ban takes effect by the end of 2027. Now, the change would require importers to provide evidence to prove that the gas has not been produced in Russia. Our very own Oliver Crook is in Berlin. Ollie, good morning. So the EU's looking to fight back against Russia more generally by closing loopholes for Russian gas flows. Is that really possible?
Yeah, and we know how difficult that's been, Francine, even on LNG, the LNG tankers, the Russian shadow fleet, and crude oil, and getting them basically off the high seas. It's been something that's been very challenging for the Europeans to do. What they're trying to do now is to exert the control where they believe that they can, and that is through the pipelines that still flow natural gas into the European Union, namely Turkstream, which is the large pipeline that goes through Turkey and delivering a lot of gas, primarily historically from Russia. Now, what the Danish presidency of the EU, they're now holding the presidency until the end of the year, are hoping to do is to basically change the language so that in the future, when Europe bans the gas fully from Russia from 2027, that there can't be any sort of circumventing, where you basically have these gas flows that go through a third country, then they go into Europe, but actually their original provenance is Russia. So what the Danes would like to do and like to see is an adoption of language that basically says that any gas that flows through the Turkstream pipeline, we will presume originated from Russia unless there is an explicit proof that has not come from that. And again, this is the Europeans in their effort to exert control where they can over this Russian gas story. That being said, Francine, we watched the news wires just a couple hours ago. The Russians are now going to be building this new pipeline to bring their natural gas into China. So, there is no sort of shortage at the moment for Russian gas buyers, particularly India and China, though the Europeans are trying to, again, close off the avenues that exist still that they control.
Investigations, Ollie, continue into the alleged Russian jamming attack on the plane carrying, of course, the European Commission President Ursula von der Leyen. Do we think this is, basically Kremlin intimidation?
That certainly is the takeaway from the Bulgarian authorities, who basically said that every indication that they had was that this was the Russians and the targeting the plane and jamming the GPS. That being said, Francine, about 85% of flights that fly over Bulgaria experience some kind of interference. But some of the more in-depth reporting around this has said that basically many of the other planes that were in the air around hers did not have that experience. And as a consequence, Francine, they had to land the plane using just paper maps. I'm glad at least pilots still know how to read paper maps in this day and age. But that comes in the broader context of what we see there, Francine, which is von der Leyen doing that massive tour around Poland, around Bulgaria, visiting sort of ammunition factory and all about military build out on the eastern flank of NATO to defend against Russia. And the broader context here is, of course, what we've been seeing across the world, where Vladimir Putin is invited to Alaska on the red carpet. He's seen there in China holding hands with Modi. He's having a bilateral today with Xi, and will be attending a military parade with the North Korean leader and in China tomorrow. This is all very sort of disconcerting, very uncomfortable for the Europeans. The next flashpoint we need to be very careful about. We need to watch, Francine. There are two terms I'm going to familiarize you with. It's the quadriga and the zapad. These are two military exercises that are going simultaneously, one led by the Germans with the Latvians and the Finns, to basically demonstrate how they would defend, theoretically, the Baltic Sea if there were some kind of attack. That will be going on in mid-September, while at the same time joint Russian and Belarusian military exercises over Belarus that'll have about 13,000 Russian troops, about 30,000 troops within Russia also supporting that exercise. So both of these happening at the very same time, Francine. There's been a lot of warnings from the Germans, the head of the military, that there shouldn't be any escalation from the Russians, and that this is really for the Germans to deter and to suggest basically how they would defend against Russian aggression. But that would be another sort of area where you could see some sort of fireworks over the next couple of weeks. We're expecting both of those drills to begin in mid-September.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, France's far-right national rally says it's ready for fresh elections as the country girds for the current government's likely collapse. Now, the Prime Minister, François Bayrou, is holding talks with rival parties in a bid to survive a no-confidence motion set for next Monday. Now, for more, let's bring in Alan Katz, our Paris bureau chief. Alan, so good to see you, even if it's another government crisis. What do we expect from the meeting going on right now with the national rally?
In a word or two words, I guess, not much. The National Rally has been super clear that they have no plans to come to any form of agreement with Bayrou. They're really only even going to this meeting, they said, out of courtesy for Republican institutions, and they plan to vote against this confidence motion on Monday. Now, it looks quite likely that François Bayrou will be forced to resign on Monday. The question then is what comes after. As you said, the National Rally says they're preparing for elections. President Macron, who will have the decision afterwards whether he wants to appoint a new prime minister or he could dissolve parliament and call elections. But certainly for the moment, many people expect him to try to find a new prime minister to name rather than calling elections. And certainly that's not, calling elections is not his first choice, even if maybe he is forced to do that down the road.
I mean, if you were to call elections, do you have any polls? What would actually happen? And Alan, at the same time, is there any chance that Bayrou could survive this?
So I guess to answer the second part first, it's politics, right? So the answer is there any chance? Sure, there's always a chance in politics. You never know really how things are going to play out. Now, every opposition party has said we are going to vote against this confidence motion. And the way these motions work, as opposed to a no confidence motion, in French, as you know, has two different words, so it's easier to tell the difference. In English, it's a little bit hard to understand the difference. But the way it works is you have to get a majority of those people actually voting to support your motion for it to pass. Without some of these opposition parties, namely the National Rally or the Socialists or some other relatively large opposition party, Bayrou seems to have very little chance of getting this passed. But that said, parties can change their mind. They can change their mind at the last minute. And so maybe he could survive. It seems unlikely, but it's always possible. In terms of what then happens in terms of who might win an election, again, just to repeat, Macron doesn't have to call an election. He can just name a new prime minister. If he were to call an election, as you know, Francine, France has a two-round electoral system, so it's really hard to predict who would win. But we do have some polls on who might come in first in the first round of voting. That doesn't mean that they would win, but in terms of the first round, the National Rally looks to get around 31.5% of the votes in the first round. That definitely puts them well ahead of any other group in France. Does that mean they would get a majority? No. Again, it's very hard to predict sort of the eventual outcome because of this complicated two-round system. But they are the leading party were it to come to an election.
Thank you so much, Alan. As always, Alan Katz, our Paris bureau chief, of course, bracing for a big day next Monday. Now, the Spanish prime minister has said that he will complete his term even if his latest budget proposal is rejected. The minority government of Pedro Sanchez has struggled to pass major legislation over the past 2 years and has rolled over its 2023 spending plan. In an interview with the Spanish television, Sanchez dismissed a suggestion that he will call snap elections. And the UK Prime Minister Keir Starmer has announced a raft of changes to his team at Downing Street in a bid to reset his government. It comes amid growing criticism over the Labour government's handling of asylum issues. Well, with us now is Ruth David, our London bureau chief. Ruth, so good to speak to you. I mean, look, the reshuffle is, I guess, we start September, it's like back to school, but what does it mean for the Prime Minister standing?
There seems to be a sense that the Prime Minister is trying to wrest control, or for Downing Street to have more say in what the Treasury does. And, if you've seen the government ministers out this morning, Yvette Cooper was doing the rounds to talk about the asylum policy and where the government stands on immigration. And the question that she got was, does this mean that Rachel Reeves' role is being undermined? Because the Prime Minister has created this new role of Chief Secretary and brought in Darren Jones, who was working very closely with Rachel Reeves. He's got in Minus Shafiq, who you know from her tenure at Columbia, but who's also a former Bank of England deputy governor. And there seems to be a definite sense that he wants to take back control of that economic narrative for the UK. And it couldn't have come at a more opportune time, because look at how UK government debt is doing right now, right? Yields are at the highest in 27 years on long-term government debt. Some of that, of course, has to do with a global move higher in bond yields, but it has to do with concerns among investors about what this government is doing on public spending and the government deficit.
Yeah, it certainly does feel like it's a general movement, but actually extra pressure, like the cherry on top for the UK, just because they're worried that he's not 100% in control. What do we know about Nigel Farage? How big of a threat is he?
So I think there is definitely a sense that the narrative over the summer, over the months of discontent and ennui that you felt in the UK in the summer, Nigel Farage managed to control it, right? I mean, he came out with all of this talk about when I come to power, which is, we're talking 5 years down the line, right? 2029 at the latest, I will deport 600,000 immigrants. Now, those numbers take on more significance because the number of immigrants coming through the small boats from France is at the highest this year, right? 29,000. We're looking at all these asylum hotels in different councils becoming kind of these points of little fires everywhere. And that discontent that people, not in London maybe, but in the rest of the UK are feeling, he seems to be effectively tapping into it. Just look at the opinion polls, right? Since April, he has maintained that lead over Labour. And he seems to be controlling the narrative in a more forceful way, for better or worse, than Keir Starmer is.
Is there a danger that actually Labour, I mean, a lot of people are not quite sure what Labour stands for right now, that, Nigel Farage's popularity drives basically Starmer's policies to the right? And is that why we're seeing so much being talked about on immigration?
I think there is some risk of that. I think there is absolutely some risk of that. I think there is a sense that Starmer is caught between, on one hand, wanting to tell the UK public that I see your concerns. I mean, we're talking about public spending has always been an issue with the councils, and now you have asylum hotels, and now you have the council saying we don't have the resources for this. But on the other hand, it is also the wealthy in the UK. We have been writing all year round about how the wealthy are being driven out of the UK because of these tax increases. There were all these trial balloons being floated in the UK press over the summer about, do they increase taxes on banks? Do they increase taxes on landlords? And just look, I think it'll be very interesting to see Reform's party conference later this week, because the understanding that we have is that a lot more lobbyists, a lot more business firms, representatives are going to be in attendance. So it seems like business feels like, well, the winds of change are moving in this direction, and maybe they feel a bit discontent with what the UK government is doing for them. We've been writing so much about what Astra said about investing in the UK, about other companies moving their listings to New York, about the IPO market struggling. So this sense of discontent is not just the UK public, right? It's also the investors, the markets, companies, even banks maybe.
So, Ruth, overall, I mean, I don't know how you would describe, I mean, I guess the autumn budget is going to be extremely difficult, right? To get it right because of all these nuances. So a lot of the pressure will really be on that, and it'll move bonds and actually investors, it will be a red flashing point for them.
100%. I mean, and you saw that moves that Rachel Reeves made earlier in the year, right, when you talk about welfare cards and the winter fuel payments and all of those she had to push back on. I think there is now also a question of when this government says something, will they follow through with it, right? So Reeves is in a really hard spot.
Ruth, thanks so much. Ruth David there, our London bureau chief, the very latest on the UK. Now, coming up, fintech Revolut launches a secondary share sale at a valuation of $75 billion. We'll discuss that and, of course, other news from the banking sector next. This is Bloomberg. Welcome back, everyone. The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Euro area headline inflation expected to tick up a touch in August, with the jump mostly explained by base effects in energy prices. Now, to get a preview of what's to come, let's get straight to Zoe Schneeweiss, our economics editor in Frankfurt. Zoe, thank you so much. I do feel like it's back to school week. Walk us through the expectations for this important inflation print.
Yes, that's right. We get the inflation print at the top of the hour, and it's expected to see a slight uptick to 2.1%. So this is the August reading. In July, we had a reading of 2%, which we know is bang in line with the ECB's target for inflation. 2.1 isn't really something to get very upset about, and especially with these base effects. But still, it does support those people on the Governing Council who say, actually, we don't need to do any more rate cuts either this year, and definitely not next week, but maybe not this year at all.
So what are the expectations for ECB cuts? Markets and economists are divided. It's not the first time, Zoe, this happens, but it's still by quite a lot.
Yeah, so markets obviously have the option of being more nimble and being able to change their mind without being embarrassed, whereas economists, once they make a call, there does need to be a major shift typically for them to change their call. So economists think there'll be one more cut, and that's likely in December. Markets say it's possible that there will be no cuts at all this year. And we've had some speakers this morning. One of them, Isabel Schnabel, who's now probably the most pronounced hawk on the Governing Council, also said the ECB is in a comfortable position, no more cuts needed. On the other hand, we had one of the more dovish central bankers, the Lithuanian central bank chief, that's Gediminas Šimkus, and he said that it's more likely than not that there will be another cut. October could be discussed, and he made some cryptic comment with Santa Claus might come with scissors, which could be understood that in December we would see a rate cut.
I mean, the Santa Claus comment, I have to say, got a lot of investors bewildered. What are you expecting in terms of data points, or actually some of the ones that have been most vocal? Zoe, what are you expecting in the next couple of weeks that could be a game changer?
So obviously those PMI numbers always are a bit interesting. PMIs aren't that reliable an indicator, but what does what they do show are trend changes. And now I know France has been in the headlines a lot. In France, we actually saw a revision yesterday and saw that manufacturing, that factory gauge, actually was above 50 for the first time in ages. So there's growth again in France. And overall, those growth numbers are something that, given inflation is so steady right now, growth could be the thing that, even though it's not the mandate, that the ECB policymakers look at more carefully now.
Zoe, thanks so much. As ever, Zoe Schneeweiss, there, our economics editor in Frankfurt. Now, Bloomberg has learned that Revolut has kicked off a process for employees to sell their shares in the company at a $75 billion valuation. Now, we understand that staff at the London-based firm will be able to sell as much as 20% of their stakes. The deal really cements Revolut's status as one of the world's most valuable fintechs. Now, let's get more on this story and other news from the banking world with Paul Davies from Bloomberg Opinion. Paul, thank you so much for joining us. Now, this brought me back to your piece back in June, where you talk about three big fintechs, Revolut, Klarna, and Monzo, that will all probably go public in the next year or two. And Revolut is expensive, but it's coming up trumps.
Yeah, no, it is. I mean, it's like, this is a huge valuation, like more than we were thinking about even when I wrote that piece just a couple of months ago. I mean, $75 billion is about 19 times last year's revenue. So Revolut is one of the faster growing out of the fintechs, particularly in the UK. And it has a more diverse source of revenue than many of these others. Yep. And it also has better profit margins. But even if it grows another 50%, this year, that's still like 13 times its revenue. So it's a huge valuation.
Well, I mean, I guess the concern for these fintechs, right, is that you grow, you have a customer base, but then how do you turn that into money? So is it offering more services? And then is it a problem of trust? Is it a problem of actually banking licenses?
I think there's two routes that Revolut is pursuing, and like many others. One is, the core thing is to try and get your clients to treat you as their main bank, where you have your salary paid in and you pay all your bills from and all that sort of stuff. The jury is out, really, whether that's working for any of these companies yet. And then the other route is just to keep expanding into new markets. And, we've had news stories about how Revolut is looking to acquire maybe a small bank in the US to get a banking license there to help, A, expand its services, and B, to make it a more familiar name so that, possibly it can list there in the future.
So, I mean, when you look at, the banking world in general, are the big banks threatened by some of these fintechs, or could we see M&A? And when you look at M&A in general, for example, in Italy, how does that fit in with fintechs?
With the fintechs first, with some of these companies, it's getting a bit late. Revolut now at 75 billion is worth more than Barclays is worth, even though Barclays makes, way more revenue, like $39 billion of revenue compared to Revolut's. There's a lot of the services that they do that the banks can just do themselves. They can mimic them and copy them, and some of the big US banks are doing very well at doing that, and some of the UK banks are doing that as well. But then in terms of other M&A, it's much more traditional. And as you say, you mentioned Monte Paschi. We've had a kind of an increase in the offer there for Mediobanca this morning. They're obviously struggling to get enough buy-in, get enough shares tendered to make that, even with their kind of relatively low hurdle of 35% to take de facto control. So we'll see. We've got another week to see if shareholders are going to go for that deal or not, with the extra little bit of cash.
Okay, we're all a bit obsessed with Italian banking, but I also need to work on my fantasy football Premier League. So let's move on to Paul's other love, football. English Premier League clubs have smashed the summer transfer record, spending more than £3 billion on new players. A record £125 million move took Alexander Isak from Newcastle to Liverpool, capping a window that saw Liverpool spend £415 million, the most ever by a single club. Now, the vast numbers highlight why the Premier League continues to attract overseas investors. Speaking on The Pulse last month, Gary Neville, the Salford City co-owner and Man U legend, told us American buyers in particular see big opportunities.
I think when you talk about American ownership specifically, I think they see real value in English football clubs because of the cost of buying sort of franchises and sports projects over in the US. So I think when they look at actually sort of English football, and the reach of English football globally is enormous, and they look at the price tags that are associated with clubs and think actually it's really good value and presents good growth opportunities in the future.
£3 billion, right, in new players. That's a lot of money, Paul.
It's a huge amount. It's like 50% more, I think, than this time last year. But you've got to look at it in terms of like the revenue growth of all of these clubs. We've got more clubs in the Champions League this season than before. £6.6 billion of revenue across these clubs, I think, for this season just finished, rising to possibly £6.9 billion for the season coming. That's from Deloitte Football Finance numbers. So, there's a lot of money throwing through these businesses.
Okay, fantasy football, your number one player?
My number one player has to be Mohamed Kudus from Tottenham Hotspur.
There you go. You've heard it here first. Of course, this is not investment advice, and we can't guarantee you have a good fantasy football Premier League team. Up next, Bloomberg Brief. They'll talk about treasuries and, of course, gilts. Not sure about football. This is Bloomberg.